Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, September 25th, 2016. Hope you guys are having a fantastic weekend. There's a beauty here in New Jersey, so let's get started. They decided to give a little bit of back on Friday. And it makes sense where it turned, which I'll show you in some of the other charts, because they, pretty much gapped it over the resistance right into the second resistance zone, and then there just wasn't enough volume or anything to continue through that, and we got the pullback on Friday. Now, is that the big turn? It's really is up in the air. I think probably the best way to look at it from this range is that you want to look at what is the potential for the more points. Is it going to be to the upside or to the downside? It's still, I believe that the larger point move is going to be to the downside regardless, even if we head up. And again, I'll go through all of that, in the other charts. But starting off, this is the weekly chart, and this is just the bigger picture. Now, again, this is not a trading chart. It's just showing what is the potential wave count and what the reactions should be. So right now, we either made the wave 5 of wave 1 right here at the highs at the 2194. And from there, what is going to happen is we're going to come down and make a wave 2 that would take the S&P, from anywhere from the 1608 all the way as low as the 990, and it would actually still be a bullish wave count because the wave 3 would dwarf this wave 1, which was a huge run. And again, I don't know what the catalysts are or any of this stuff. I don't even know when it's going to play out. But this is the wave count that people that I've followed that are really into the Elliott wave, they kind of have a similar type count. So this is really what we're looking at right here. And what we're wondering is this 5 done, or do they have another push up to make the 5 of the 1? But still, the next move should be to the downside. So if we go to a daily chart, here you can see we're trading within this rising wedge right here. So if they're heading up, then it would kind of hint that we have one more push up for the wave 5. But if they do, then we're looking at probably a top somewhere between the 22.15 to 22.20 area. And again, even just this pattern here is looking for a move to come someplace into between the 2050 all the way down to this, the 1890 area. So we're looking at, possibly, let's say from these highs here, maybe 20 or 30 points higher. But on the downside, you're risking 100, 200 points to the downside. So that's why I'm saying, I believe that the larger point move is still going to be to the downside, but they may try higher first before that happens. So I have these blue dots here, and what that is, these are just really the fractal patterns that have been in place, that look very similar on a technical outlook here. And here you can see we had the bearish divergences after a pretty big high spike up. From there, we had a drop and then came up, and it just made the momentum get to the midline here before we came up and we, just barely made a new high, and then we took out these lows. So if it's going to follow the same pattern, maybe they're going to come up to this 2194, 97 area, make the top, or maybe even try for the 2200. But once that's done, this low right here at the 2117 should be taken out, and we're probably going to come, someplace down into the 2048. That would be this fractal pattern right here. So, just keep that in mind that, even if we're looking at this, again, you're looking 20, 30 points to the upside from these highs. But again, you're looking at almost 150 to the downside. So there's still more points on the downside than the upside on it. And I don't think I'm going to be, bullish on this markets until I see a full recycle of momentum. And we have not had that since going all the way back to February is when we finally had one. So it's it's something you want to keep in mind, because these double very long divergences, you need a little bit more of a break to reset things, and when it falls, it usually goes really, really fast. But if it's going to head higher, you want to keep an eye somewhere on that 2220 area, and that would be the top of this wedge. But again, the next move should bring the S&P somewhere down there. If we look at a 60-minute chart, very overbought right now. We have a little bit of a bearish divergence, but it's not really. I usually like to see them when they start going up and down like this. But there's a little one there. You can see momentum is trying to roll over there. We made it. This drop right here only made it to the 38% retracement, and that's going from these lows right here where we had 1, 2, 3, 4, 5. Now that is not your typical wave 2 down, and the more likely would be someplace down into the 2092 or even all the way down at the 2033. And that's just for this short-term pattern right here, from these lows to these highs. Now, the alternative count, and it looked like it was good, and I said I'm going to leave this count as is until it proves wrong. And really proven wrong would be taking out these highs right here. Now, if it is, like I said, all I'm doing on this is, instead of this being a 1, 2, 3, 4, 5, all it is this moves to the 3 here. This is the 4, and now we're making the wave 5. And then when that completes, your expectation should be that it's going to be a 50 to 78% retracement to wherever those highs are. Now, we didn't have any bullish divergences at these lows here, so there's a shot that we may not get bullish divergences at the top. I think it's still a little dangerous, and one of the main reasons why I think it's dangerous is we're still heading into these elections, and nobody really has any idea what is going on. And I'm not sure that much money is going to be piling into our markets with all that uncertainty. So anyway, those are the different wave counts. Now, if we take a look at the 15-minute chart, this is where I'm talking about, where they gapped over this, this resistance area here, and then they made it right into the secondary resistance, and that's when we pulled back. So we had some bearish divergences here. We don't have anything here. We don't even have momentum really through the midline, and we turned right around that 78% retracement. So that's actually could be just a bearish ABC move, and now we're making another 5 waves to the downside. And that's why I'm saying that this market's really tricky right now. And it's more just for the short term, because, like I said, I can build a case for us going to 2220, and I can build a case that this was just your wave 2 up or wave B, and we're going to come out and take these lows out. So I think that just the way that they've kind of maneuvered this market with the gap ups and gap ups and gap ups, and then using the the Fed release as an excuse to pop it higher, it hasn't worked in the past as far as being sustainable, and I'm not sure they're really going to get it this time, because I don't believe they have that many shorts to be able to really squeeze things higher. But we'll have to wait and see. So what really the bears are going to have to do is, if they take out these lows, they're going to come into this support area here that's between the 2153 and the 2150 area. That's what they're going to have to get through just to get a reaction trade down to the 2137. If we start breaking through this support here, anywhere from the 2137 down to the 2131, that's when I believe that this was just a wave 2 up, and we're coming back down and going to make a stronger move to the downside. So that's really what the bulls have a little bit of a cushion before we get down here. Really, what the bears want to do is try to. Well, I meant the one thing that's crazy is that, just like I was saying with this trade here, where it's 100% certainty that they're going to come close it before before rallying, and we made that move and we actually didn't close it, and now we have another gap that's at the 2176. So most likely these are going to get closed, or at least this one will get closed before a more meaningful drop. So let's say we do get a big drop on Monday or early next week. then we come down here. What it does, it leaves the door open for a a long side trade where they're going to come up and close this this gap right here. So that's really it on the 15-minute chart. If the bulls, if they could push it through this 21.79, then real good shot that they're coming to close the gap at 21.80, and then most likely making a move for somewhere at the 21.86 level, or again, testing the previous highs or breaking them a little. So if we just look at a 5-minute chart, you can see that, this move right here is only about 23%. With the size of the gap up, if we do see weakness, I wouldn't be surprised to see it come down to the 21.57 or even the 21.50. And, from that, really what we want to do is just monitor things. I'm not getting extremely. I'm more bearish than I was just because of the way that they moved it up, and it's pretty exhausted right now. But as far as we want to just wait and see let the dust settle before we start really committing to any direction. And I do believe that you can layer in some short positions, but you want to wait for the rallies to do that. You don't really want to be going crazy right now because it's been a pretty strong move. We want to make sure that the bulls are out of gas. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.